102. There's questions that need to be answered here.
108.
Oh, 108?
Yeah.
Sam Gordon, property investor and founder of Australian Property Scout and Buyer's Agent of the Year, tells us the story of how he got to a whopping 108 rental properties, starting all the way down the bottom.
Dropped out of school, never did business school. I was literally a farm labourer, and this is the portfolio I've built. And I was a really low income earner when I first started my portfolio. Bought my first property making 38 grand a year.
Opening up how extreme profits in property investing aren't just for people that start with lots of money.
It's this kind of stuff that's enabled you to go from $1 million income to now over 2 million income.
Some of these deals I did in the high 300,000s, and I'm selling them for over 1.2 million.
Pulling back the curtain on his massive portfolio to share stories he's never opened up before about how he grew this large.
Never spoken about this before. A really big part of my portfolio has been cash flow.
I'm curious what you actually do. Can we see your calendar?
I get up at 5 a.m. every morning. I do mobility work. First meeting normally starts around about 9. And then what I do these days...
If someone's like, okay, I want to replicate what this dude's done, how do they make that a part of themselves?
It's pretty simple in my mind. It's
building a portfolio of more than 4 rental properties in Australia already puts you in a fraction of percent of the population. Building a portfolio of over 100 isn't something that even gets measured. My name's Todd Sloan. This is the Pizza and Property Podcast. And if you're interested in scaling a large property portfolio, you're about to listen to a story of one of the few people in the country who has built a 100+ rental portfolio. You're listening to my chat with Sam Gordon.
Sammy Gordon, it's been a while.
Big Todd, mate. Great to be back in the studio, man.
Mate, it's always a pleasure to have you here. Now, we're starting off with some big numbers. $48 million portfolio. You've been building this for 15 years.
It's been a while.
Last time we were talking about you'd built the gross rental income up to $1 million plus.
Yep.
That was like a year ago. You're now at $2 million plus a year just in rental income.
Yeah.
Most people are pretty happy to build a $2 million portfolio.
Yeah, I think last year we went through it was something like 1.1, 1.2, something like that. But yeah, man, I've gone through a bit of different acquisition within the portfolio. I finished some builds. I've been pretty heavy on kind of actually rounding out my portfolio with some cash flow stuff as well over the last, which kind of plays well into the title of what we're talking about as well, because obviously getting more builds and grannies and things like that done.
So you say rounding out. Were you planning on stopping, mate?
I'm not stopping. This is about rounding out in terms of what you what the session's about today, what the podcast's about today.
Gotcha.
No, definitely not.
Okay.
Well, I don't intend to anyway. Mate, I don't intend to.
Well, this whole episode, I want to really pull apart a lot of, I guess, what's got you here. What are the strengths that you really need to lean on to actually build a large? Like large doesn't even feel like the right descriptive.
It's a big portfolio.
It's a big portfolio. Yeah. Okay, to build to this scale.
Yeah.
First thing I wanted to ask you about is borrowing. Okay, most people get to 3, maybe 4 properties, and it's like it's time to tap out. They can't keep going. 102. There's questions that need to be answered here.
108.
Oh, 108.
Yeah.
108.
When we spoke about this, before we a while before we booked it in, there's been a few completions.
Just an extra 6. How does it work, man?
So it starts getting to a different level, and I think that's where we kind of laugh about it. And I never obviously try and be vain about these sorts of figures or anything. It's just property has become my business, right? So not only obviously do I work in property, but I treat my portfolio very much like a business. And even the way I strategize and structure and build my portfolio from that perspective, I just treat it like a business. Like, what are the steps that I can take in my portfolio that keep me moving forward? And so that has included selling some properties. So specifically some properties that I've held for quite a while. A lot of time in my personal name, lower yielding deals that have had substantial growth. So I look at some of my Sydney properties. They've quadrupled in sub 10 years because they've doubled and then doubled again.
How low is a low yielding deal for you?
Well, this is the thing. It's because it's had so much growth, right? So like some of these deals I did in the high 300,000s. I constructed these deals, put these deals together myself, and I did them in the high 300,000s, and I'm selling them for over 1.2 million. So I've gone through some pretty significant growth from that perspective, and they're only yielding $750, $800 a week. So on purchase, they're excellent. They're like 10% plus. Yeah. But some of them I've extracted equity from them, and just kind of gone through different things. And it's like, okay, well, I could pull the equity. Let's say I pulled the equity from a 1.2 mil and I took out, max lending on that thing. That's 240 grand worth of equity I'd leave in if I pulled up to 80%, 960K total LV, loan, if I pulled it all the way up. To then only be able to rent it with interest rates where they are now, to then only be able to rent it at like $750 a week.
That's what you're saying.
Yeah, that's where I would really get smashed if I just tried to hold on to everything. So I've just kind of gotten to a point where I've realized I just need to sell some things off, sold some things off, and then put that money towards multiple styles of deals, and a really big part of my portfolio has been cash flow. It always has been. I was a really low income earner when I first started my portfolio. But this is the thing, and obviously having a business income does help, obviously, when you get to this level as well. But man, I was 20 plus property portfolio before I ever started the business. And if anything, I was very much seen as a lower income earner. Never made over 100,000 a year as a PAYG income earner. Bought my first property making 38 grand a year. Back when I won Investor of the Year in 2020, I think I was only making, that would have been at the peak. So I would have been somewhere in the 90,000s. And I had a 20 plus property portfolio at the time. I just structured so much of my portfolio around great yielding deals, especially all the way back then when I really needed it. Combination of really strong yields in really strong capital growth areas, because when you combine at the bottom and still get a great yield, when you get that growth, this is where the massive portfolio growth comes from. Maybe you pull your deposit back out and roll into another deal. But if that's all you take out of it, you keep your LVRs really low, then if that property goes through, we've seen some huge growth over the last few years, especially the last like 3, 4, 5 years. If that's all you take out of that deal to then get you into the next one, and then you do it on the same next one, you're keeping your LVR really low. And as rents and values grow, you're keeping that overall LVR really low. Cash flows stay really strong. That's pretty much been like the real driving force of being able to keep building the portfolio. And then as you go through a few sell downs and you get some really big chunky amounts of deposit back out, you roll that into similar style deals. You can start doing it at a serious sort of scale.
So when you say a few sell downs, you said 5 out of 108.
Yes.
It's not that many.
It's 108 rentals. I don't own 108 properties. So I have 17. I was actually doing the numbers on the plane when I was flying down last night. I have 17 grannies that are completed.
Yep.
But the thing is, man, is when you're going in with at this level now, like 20 or 25, and I got some commercial deals in my portfolio that might be 30% LVRs on it as well. 30% deposits on it. When you start putting those sorts of, 20 to 30% sort of deposits down on things, renovating in cash sort of thing as well, it just keeps that LVR significantly lower, especially when you go through the sort of growth we've gone through the last few years as well. You're able to strip that out, roll into the next deal. And within like 2-3 years, like some of those deals are now sitting at like 20, 30, 40% LVRs purely because the amount of growth that it's had. The value's doubled. Yeah. But if the values, let's say you buy a property and it's at 80% LVR, even if you stripped it up to 100%, right? 100% of what you purchased it at, but then it doubles. You're only sitting 50%, exactly. Yeah. And then some of these deals that I've owned for 10 years, sort of like 7 to 10 years, a lot of those are sitting at literally 20, 30, 40% LVRs. So that's what like allows you to strip the equity and your LVR still stays super low. But then when that combination of really strong cash flow comes in there as well, that's just what keeps it surging ahead.
Is that the thing then? Because I've spoken to a few people, and especially when their businesses get bigger, they're kind of like, I don't care if it's a bargain anymore, because the idea is focus just on the business, and then it's just getting the serviceability up so you can keep growing the portfolio. If I have to pay 20 grand over, I don't care, because I'm going to hold that thing for 20 years and it's going to double and double, and it's like awesome. Whereas you're still operating under the same fundamentals as if you were earning 90 grand a year, going like, no, I need to buy the equity, I need to keep the LVR lower, but I also need to make sure that it keeps manufacturing that growth. So you're still doing like developments and renos and...
Man, I'm still a bush pig at heart. Like I'm still the bush pig that made, super, super cheap, super low incomes. That's still me at heart, 100%. I'm still all about the discount. But the important thing I think these days is I don't take things off the table of clients. You know what I mean? So like the really good discounts, we were actually having a chat about this at gym this morning. I'd prefer to
talk about that deal because that was interesting.
We would. But even if I throw in the equation of, remember what we were also talking about of like some super high flying client or some kid making 70 grand a year and me helping him build his portfolio. Yeah. I prefer to give him the banger that doesn't need the work. And then that's still a great deal. But then for my own portfolio, I'll go buy the meth den or something like that because I know how to manipulate that and actually turn that into a great asset. But then there's also risk associated with it. So and this is the thing obviously of having the business now and what we do is we might have one of those a month that comes through, right? And hence the huge amount of growth over the last few years. They might come through, but it's a bit too much risk. It's also a bit too hairy for a client to take on a deal like that. So there's the sort of stuff that I'll put in my portfolio. I don't put in the super clean deals that have a nice discount and they're ready to go. Like there's not that much point me buying those because obviously it would still make sense, but it makes more sense for me to give it to a client that's like a nice, easy, clean deal for them to go through and do, rather than try and put them onto the massive, reno project or hairy deals from that side. So that's where the consistent accumulation comes from.
There's gonna be people wondering, like, how big a risk are we talking? Can you unpack one of these?
You just want me to talk about that deal from this morning.
It was interesting.
So like that, okay, let's talk about that deal in particular. In a very strong growth region of Perth, picked it up early last year, 4-bedroom, 2-bathroom, double garage home, 700 square meter block, and I picked it up for 250 grand.
Okay.
So at the time, market value, if this thing was in good nick, probably would have been high threes, maybe $400,000 if it was in good nick.
Okay. How bad a nick was it in?
Okay, so to paint the picture quite clearly here, it was an old crack den from a long time ago, like meth, right? So there's people living in there had used meth. It had been vacant for about, we were told 5 years. It looked like it had been longer. The ceiling had been ripped out. There was axe holes through all the doors were missing because they'd all been macheted to pieces or axe or whatever it was through it. All the kitchen cupboards and everything were missing. Like this thing had.
You bought the Breaking Bad house off of Jesse, both.
Yes, pretty much. Yep. Man, there was like, that's too much risk to put onto a client. You know what I mean? Like it's because the biggest reason why there's too much risk in that scenario, when meth's being used in a house, because crystal meth's being used in a house, the rectification required on it, if it is at its worst level, and this thing looked like it was probably at its worst level, can go upwards of $80,000 to $100,000 at its absolute worst. Now, this was a big house as well, like it was a decent sized house. If this was at its worst case, there might not have actually been that much money in the deal. But if it wasn't that, but there still would have been some. And that's why for me, it was like, I was weighing it up.
Yep.
We knew it hadn't been, this is so weird to go into this stuff. We knew it hadn't been a cookhouse because if it was a cookhouse, it's very...
How'd you know?
There still would have been, it would have been in worse nick than it was. And you would have been able to tell in certain rooms if it had been as well. Like there was no signs of literally, because when they cook it up, like it all goes, goes all over, fully stains the walls and everything as well. It's just like it goes to a bit of a different level than
Pretty
what it
obvious.
was. Yeah, so we knew it was probably, we thought what it was probably literally that crack den. Not a cookhouse, but a crack den. It's so weird to go into. Never spoken about this before. There you go, mate. You got it first. And that could be a sliding scale. It could be not too bad, and maybe there was one guy in it that was like, cooked himself out and had, brought the house down himself essentially. Or it could have
maybe
been,
there was like 20 people crashing there.
Exactly.
Yeah,
and if
gotcha.
it was 20, that's where it's just like, that's where you start talking the same sort of extent of a cookhouse. Because when they're a cookhouse, that's where it's like it literally bakes into everything.
And that's when it's like the 70, 80 grand.
That's where it's you got to strip everything. You got to do full rectification. It's think of like the worst fibro job you could ever think of, where everyone gets scared of asbestos and then 10x it, and that's pretty much like that's a cookhouse.
Okay, and this is why you're not giving this to a client, because even if someone says, "Hey, I want a reno," it's like this is beyond normal reno.
Yes, and this is where there's huge risk. There's potential for huge reward, but there's also a huge amount of risk that can be involved with it. And we try and get the picture as early as, it's not like I just went in and go, you know what, whatever, it's worth just rolling the dice. I made a calculated judgment call that it wasn't a cookhouse, it wasn't as bad as it could be. It was going to be between one or the other. If it was great, I was going to make 100 grand on the deal. If it was bad, it could have been 20 or 30 grand. I'm not going to put a client into $100,000 reno to make 20 or 30 grand. So this is where these sorts of deals are where I roll the dice in my own portfolio, because there's a risk versus, the risk and reward there is worth it for me in that scenario, and not, putting that onto a client as well.
What'd you end up with?
33 grand.
33. Oh, so it didn't go too well.
Everything was 33
grand. Oh, it cost 33. I thought you meant you made 33 grand.
We were so like, because the other thing in WA is you can't pull out on building a pest unless it's a structural defect. Yeah. So we tried to get everything we could in this thing, but it had been foreclosed on. It was like we couldn't get the correct terms that we really wanted this thing, that also gave us protection. So again, proper roll of the dice. We had the forensics. They go in, they swab all the rooms and everything. And they came back, and it was just one of the bedrooms had it. So it was like a single guy maybe, or a couple. They obviously probably cooked up in the bedroom. And then went and attacked the rest of the house when they were on their high. So it was best case scenario of what could have come out in this situation.
And so you're all in for what, like 280, 290?
Yeah, it would have been. Yeah, I think it was 283. It was literally $33,000 reno. So you still have to rectify the house, but it's literally just a deep clean instead of having to be like a full hectic job.
Yeah.
It's just pretty much a deep clean. So think of a bond clean with just like a little bit more scrubbing on the walls.
Okay. All right. So this place is absolutely shot. You're going in with high risk.
Yeah.
It's obviously worked out pretty well for you. But what I'm really hearing is it's this kind of stuff that's enabled you to go from 12 months ago when we last spoke, $1 million income to now over 2 million income. You're still keeping the exact same philosophy you started with, but you're doing it at a level now that you probably couldn't have when you began. It's kind of just turning the volume up on it, because if you did this at the start, you could bankrupt yourself.
Yeah, exactly. And it's probably more the scale of it is what's ramped up. So the style of the deals is the same. So I used to do builds myself like for 80, 100 grand, and they might take me out of the market for a year. And this thing took like a while to come to fruition, because they've got to swab it, they've got to go send that off, then it takes a while to come back, and then you've got to get everyone lined up. You still got to do your decontamination, all the rest of sort of stuff. So like it takes a bit of time to do it, and it's sort of the same thing. It's more just like an extensive reno, that you might do on that front. And yeah, man, it's just like I do those now at more frequency. So, and also it's not like I pick up a crack den once a month sort of thing, but it'll be different things pop up. We've had deals where I think we actually spoke about this a year ago, or whenever it was, that we last caught up and did one of these. I think the potty was about a year ago that got released.
About that, yeah.
Yeah, and it was it was a deal that like a client crashed because he couldn't do the renovation, and I just threw in a walk away cash offer. So those sorts of things, again, they happen. Like a huge amount will come up in the building and pest. Even if we can negotiate it off, the client may not be able to do it because of the amount of rectification works. And then it's just like, okay, well, this job that was supposed to be nothing is now turned into a 50 grand reno. Here's a cash walk away price, and they're the sort of deals that I'll just do and just have ticking over in the renovation background. But again, they're high risk. If something's coming in at 50 grand reno, that could blow out, could come in under. But like if that's what we've got it quoted at, that's probably what it comes in. So this is where that risk versus reward for me, like, yes, they're still cheap shitters at the end of the day, but they're what I know and what I've always done really well on over the long term, and I just still keep rolling them. So
you often hear people saying like, no, you got to transition into commercial. You've got to like, don't keep with resi, because the real deals, the yields, everything is in commercial. And you said you got a couple of commercial in your portfolio now. Why not the sole focus though? Is it because of exactly this? Because you can't, like, finding a warehouse on 3 titles that's a bit of crack warehouse. It's not as common.
Crack den warehouse. Yeah. I'll go looking for them. Yeah, man, they're a lot cleaner. So I think the biggest thing in commercial is it's extremely hard to find. Almost like the best way to probably put this is like distressed sales. Okay. So or like fire sales and things like that. It's very hard to find that in the commercial sector, because a lot of the time there's good money tied up in it, and there's people looking for that sort of thing. So you're almost always capped at a certain amount of a yield.
Okay. That makes sense.
And so for us, and like we do a bit of commercial now as well, and I've got it commercial in my portfolio. Man, for so long, I could get a significantly better net return in residential than I could in commercial. So for the average person, and potentially for the average BA, average investor who's not really trying to manufacture that yield, they probably weren't getting a better yield in resi than commercial.
I see what you're saying.
So for the retail investor, commercial will always outperform from a return perspective and a net yield perspective. But for all these years that I've been doing this, I've almost never found a commercial deal that's outperformed what I can do in the resi sector, except for in the last 12 months, where yields have significantly compressed in a lot of the states that has allowed that, where we have been able to manufacture yields. And because there's been so much price growth in Queensland, SA, WA, New South Wales for a long time, yield compression has been massive. But because the yield compression has been so strong over that time frame, it hasn't really made sense for us to try and manufacture yields. Or they've still made sense, but we've been dialing it back because the deals are so few and far between. The deals got to be really good, got to do a more extensive reno. Putting the deals together have just become a lot harder from that sense because of the yield compression. Hence why now turning more into commercial. And 12 months ago, I think I had 2 commercial in the portfolio 12 months ago. Now I'm up to, I've got 6 in the portfolio and still hunting for more now. So I'm transitioning to it now. But up until 12 months ago, commercial wasn't outperforming resi for me. So there was no massive sense for me to transition into it from that perspective.
This is something that I've always liked about you, Sammy, is that it's not like this is the way, you got to do it my way, and this is the only way that works. It's like, what's working? Let's keep doing that. But if it changes, okay, let's now do the other thing that's working. Yeah. And it sounds like that's exactly the way that you explained that then.
Yeah, 100%. I mean, you got to stay fluid. Like it's what makes me kind of beat my head against the wall when these, like the real old school BAs that have been around for like 20, 30 years, and they're still trying to tout blue chip all the time and time in the market. It's like, so you would only invest in one location, and then once it peaks out, you're going to sit in that market and flatline for 10 to 15 years and not buy anywhere else. Look at Perth, has doubled in the last 3 years. Adelaide's doubled, more than doubled in the last 5 years. Brizzy's doubled in the last 3-4 years. So you would have missed all those markets just to sit in that. It's like, you can't just like sit in this one thing. You've always got to stay fluid and move. And it's the same thing with the yield compression. Both myself and clients need that in our portfolios to keep moving forward. So if big yield compressions come in, if we can get a better result somewhere else, we'll change 100%. And I've openly said before that I prefer resi cash flow over commercial, and I just explained the reason why. But now I'm getting to a 50-50 point because I can find better yields and net yields in commercial, but it also carries a higher risk. So this is where it's like, it's always a catch-22. There's always two sides of the coin, and you just got to play what makes sense in your portfolio at the time.
To unpack the higher risk, do you see the higher risk? Are you referring to the commercial side?
Yeah, of course.
Yeah. So do you see that higher risk as more the extended vacancy period?
Yeah, for sure. And this is where I wouldn't want my entire portfolio built out in commercial from a cash flow perspective.
Yep.
So I've always got the idea in my portfolio, and I always build clients' portfolios. We've got a set amount of resi, or a prescribed amount of resi that we're working towards within that client's portfolio for their strategy to pay out the cash flow deals that we need in there. But for me, it's a mix, man. You wouldn't go 100% commercial for cash flow in my mind, because if you've got a couple of big ones and then they sit vacant for 6 to 12 months, that's going to be a big hurt. And commercial's sweet now, right? And it's pretty decent now. In a lot of areas, we've seen a lot of like vacancy compression for a long time. Some vacancies are blowing out on products right now, but the economy's also been pretty good for like the last 10 years. But the economy will go through periods where it's pretty bad. And you think of the GFC and the period kind of like the 5 to 10 years of recovery kind of post like global financial crisis in 07, 08. There's a solid 5 years there where the economy was like struggling. Like we were okay, but like what held Australia afloat was mining. The mining boom at that time is what held Australia afloat, what almost no other country had. Most of the economy was struggling during that time frame. And if your whole cash flow portfolio was held at that point in commercial, you probably would have been living pretty lean for those next few years. And this is where I love diversity, and having that mix of diversity in the portfolio, it's just a hedge. You know what I mean? Like I wouldn't want everything in commercial, but I probably also wouldn't want everything in resi. And yeah, man, it's just a hedge for me. I love a hedge because it just keeps you insulated from things changing in the future.
Do you think of Anchorman whenever someone says diversity?
No, I don't.
I believe it's an old wooden ship.
Oh, he doesn't believe in diversity. I love it. He probably would only go with one cash flow type, Ron Burgundy.
Yeah. It's all well and good to talk about everything on the up, right?
Yes.
And we're going to do more of that. But I know it hasn't always been smooth sailing.
Yeah.
Talk to me about when the wheels almost fell off.
There's probably been a few over the journey, very early on. So when I bought my first property, actually, there's probably a few. There's definitely a few.
What's the standout?
There's probably 3. Actually, the wheels didn't almost fall off in it. There was a deal that almost came fully a gutser like within a year or two ago. But probably the 2 big ones, I'll wind all the way back to the start.
Okay.
When I bought my first property, I didn't understand what Strata was. So I left Strata out of my calculations when I bought my first home.
This is Wollongong?
Yeah, this is the unit. Well, the kind of the bank almost did as well, right? When they were factoring my numbers. I mean, I didn't really think about it as a thing. I didn't know Strata was a thing. I didn't know body corporate Strata was a thing. Owning that and living right on the knife's edge of being able to actually afford a place, my first place at 19.
Because you were also like 30, 40 grand a year back then, weren't you?
Yeah, it was. I remember clearly. I was making $750 a week, gross, which was netting me $584 a week, net a week, 584, which was 39 grand a year gross. So, and my loan was 250 grand on it. Interest rates at the time was 7%. I had half of it fixed. I had half of it P&I, half of it interest only. I didn't really know what the difference was. I heard both were good, so I was like, okay, well, I'll do both. and yeah, man, like it absolutely smashed me. And when those Strata bills came around, the big hit was when it was like maybe my 3rd or 4th Strata bill came around. Do you remember when timing belts were a thing in cars back in the day?
Are they not anymore?
I don't know. I don't think so.
Okay.
No, they go like gears and stuff now.
I don't know.
But the timing belts were the big thing, obviously, right? Like kind of pre-2000s.
Yeah.
And man, I blew a timing belt in my old Land Rover Discovery, and the cost to repair the it was like a $6,000 car. It was like dearer to repair it than when I'd blown it up.
So it's kind of a write-off, basically.
Pretty much, man. And I didn't have a car, and I couldn't afford to fix it. I had to try and buy something, and like I was living down there, and I was like full on the edge of kind of not being able to afford it.
And home wasn't just like 20 minutes down the road either, was it?
It would have been about 30, 40 minutes from Wollongong back to where I was working on the farm at the time.
That's right.
So yeah, it was about 30, 40. I can't remember exactly how far it was. But I ended up just borrowing the 1 ton of work ute that was like pretty much never used, this old clapped out thing. I just used that and I finished the reno, and then I moved out of that and moved back into home for a little bit just to kind of because I was like right on the knife's edge, man. Like I was almost done.
So it all almost fell apart before it even started.
Yeah,
really.
100%.
Yep. Okay. And looking back now, was it as simple as you should have done your numbers properly? You should have done looked at your cash flow. Like what was the...
Yeah, I think the issue when you buy your first property, when you don't really know what you're doing, is you don't really understand how to assess cash flow. You don't really know how to assess what everything costs. They give you it, but at 19, you're like, oh yeah, the bank says it works. That I can afford it, so I'll buy it. You know, I think this is 15 years ago, man. On that first deal, I think I did kind of calculate everything as much as I could, but I just left Strata out of the equation, and Strata just kept going up. So this was like 12 months in, and yeah, it had gone up like, I don't know, 30-40%, or sorry, it had gone up from something like 600 a quarter, sorry, to about 1,000 a quarter. And it just smashed me. So that was probably the biggest thing where it almost came a guts like right at the start. Over the next few years, I continued to acquire from 22, I started acquiring kind of like 1-2 a year, and I flew very, very close to the sun. There was a few times where, yeah, I was really close.
Do you think you need to?
If you're a super low income earner and this is your vehicle, yes. Like, I wouldn't say this is financial advice, take it. No. But if you're really trying to push hard, yeah, you kind of do.
So you're more like the Michael Phelps, let's train every single day. Everyone else has taken a day or two off, but you're just like, no, if I'm doing it, I'm doing it.
You think about every deal you leave out of the portfolio a year. Like, if I think about the early ones I bought in Adelaide, they've tripled. Since I bought those in 2015, 2016, whatever it was that I bought those in, they've all tripled. Like, imagine if I only bought one of them instead of two. The deals I bought in Brizzy in 2016, 17, they've tripled. So, if I had left one deal out to conserve a bit of capital, it's probably in today's values of how much we're probably talking potentially like $2-3 million. But it's also the compounding effect of what else wouldn't I have bought because of the amount of growth that came through as well. So that's just direct correlation of the properties I didn't buy in that potentially couldn't have bought in those years. But then if you actually throw the throw on of it, we're probably talking, it could be 10, could be 15, 20 mil, who knows?
So talk me through like the day-to-day for Sam Gordon back then. So it's like you've got like $20 in the bank. It's like that lean, or is it more like I'm down to my last $1,000 in savings? Like how are you managing this?
I'm probably sitting sub $1,000. I can't remember exactly what it was, but there would have been plenty of times I would have been sitting sub $1,000. But this is also where I realized the importance of cash flow. So after the first one, where I was always flying way too close to the sun, thankfully, after I did a reno, I got like $100 a week rental boost. So that really helped me sort of survive those next few years. Stripped some equity, had saved a bit of cash as well when I did the second deal. That was a build. And then what I realized was just like, okay, I'm making money on these deals, but they're costing me too much. I don't make enough to be able to hold these. Like, I was pretty much done. And I remember when I spoke to the bank, they're like, oh, maybe you could do, if you could get like a 7% yield, but you could maybe buy it at 200 grand. I was like, 200 grand? Like, anyway. And then that's when I started looking at Adelaide, Brisbane, areas like this.
What can I get for 200?
100%. And then so I started to find these areas and then started to find the yields. And then I was like, okay, well, if I can find something with like a 7%, like how hard would it be, especially if I renovated it, to get like an 8 or a 9%? And then as interest rates started coming down a bit and they were sitting at like 5s and into the 4s and stuff, and I started doing these deals like 8-9% on just a growth property, that's where I was like, okay, hang on, the bank balance is starting to go up when I buy properties instead of down.
That's when the penny dropped.
Yeah, man. And especially for me on that income, that's when I was like, okay, sweet. I'll buy it. I'll do a reno. I can pull the equity back out and then it still takes care of itself. So I'm getting my deposits back out and then it's still taking care of itself or more. I'm getting a little bit, I wasn't looking at it as like I do anything with that money. It was just keeping the account going up rather than down.
All right. So you're buying low value properties.
Yeah.
By the sounds of things as well, and I know more about your backstory, a lot of them are distressed sales as well.
Yeah.
High yields, like you said, it hasn't really changed. Now there might just be a bigger element of risk involved. You might be taking on deals now that you just wouldn't have 15 years ago.
Yeah.
Okay. As far as rebuilding, this is something that I think a lot of people get curious about. It's like I think this was a Henry Ford thing.
Yeah.
Like if you lost everything, how long would it take you to get it back? And what would you do? I'm curious to see how you answer this. All disappeared tomorrow.
All disappeared tomorrow and I got to start again?
You got your knowledge now.
Yeah.
You're still Sam.
Yeah.
But you're starting back on, I don't know, like a standard sort of wage, 80 grand a year, 70 grand a year, something like that.
Yeah.
How you doing it?
So the funny thing is, as you said before, that like a lot of the other guys that you speak to about this sort of stuff, they go, nah, I don't care if I'm paying a little bit overs or whatever. Man, I'm still in the trenches. I'm still doing those deals now. So what do you think changes if I go all the way back? I might wind the scale of renovation and risk down a bit, but I'm still doing the same deals. So those sorts of deals are probably deals that we would do as renovators for say clients now. So like you might get in there and maybe spend 10, 20 grand, spruce it up, painting floors, for, all the basic sort of stuff for maybe 10, maybe you're putting in a kitchen or a bath to go 20, 25, something like that. I would start back again. I would be exactly the same thing that we help clients do now. So I would be entering markets that I think are really good value Low entry price points, really good value, good yields. Where can I try and buy in a discount? I'd be trying to force value with a renovation, pulling my equity back out, rolling into another deal. And man, I'd just be completely focused on that because like it's worked so well for me in my portfolio now. And that's why like I'm surprised that you say that like I am, and I'm not surprised that you would say that, you know, some people, they don't care if they pay overs just to pick it up, let it sit there and do the thing in its portfolio. I never built my portfolio that way. I never made big money as a PAYG income earner. So like I had to really earn the right to be able to build my portfolio. My psyche hasn't changed. Like, man, I still go into Coles, and if there's two peanut butters sitting on the shelf, I'm picking the one that's on sale. Even if the other one's my favorite brand, if that one's half the price, I'm still buying it to save myself $3. Bro, you would laugh. My wallet's in the other room. Yeah. I still carry around. This is a little bit idiotic. I still carry around fuel, the bottom of the Coles thing.
Yeah.
You go in and fill up a Ferrari and you're using a 4 cent off code. Like it's stupid, but I still do it. I've still got it. I don't know, man. It's like inbuilt. Like I need a discount. I need a, you know what I mean? And that's just the way that I roll like that all the way back at the start, man. I still roll like it, filling up the bloody $750,000 car and you're using fuel codes to do it, you know?
This was actually going to be one of my questions a little bit later on, and you perfectly segued into it now by accident. How can people build that within themselves? Because I feel like that is just a part of you. Like your peanut butter story that you just told, you and I have talked about that exact thing before. And I actually told that to someone the other day that was like, how does Sam do it? And I said, it's because it's him. It's like even down to, and then I explained the peanut butter story.
Yeah.
How... If someone's like, okay, I want to replicate what this dude's done. I don't just want like 2 or 3 properties. Like still great achievement, but like I'm shooting I'm swinging for the fence.
Yep.
How do they make that a part of themselves?
Just start doing it. Make it a non-negotiable. If you want to create like, if you're making good money, it can be a little bit harder, right? So if you're making decent money, it can be a little bit harder because you got a little bit more. But if anything, it means you should be saving harder. And this is the thing. It doesn't matter how much I make. I will probably always operate at that. To that level. I'll probably always operate of looking for discounts, I do it when I travel. I do it when I buy. We told the story this morning of when the latest car that I bought. Like I still always look for discounts, always look for bargains on that side of things. And I think when it comes to changing your mindset and your psyche around it, I did it because I didn't have a choice. Right. So this is where it's a bit harder for people who maybe they do have the choice. So you've got it. You consciously have to make that choice to pick the thing that maybe you don't want, but it's a better deal. And I think if you make that choice on everything over and over again, it will inherently just become you. So and this is where it's hard for a lot of people who haven't grown up with that. I had almost like the school of hard knocks. I had to do it if I wanted to build a portfolio. Man, I dropped out of school fresh year 11. So pretty much I finished year 10. That's it. Have no uni degree. Never did business school. Don't have a trade. I was literally a farm laborer. And this is the portfolio I've built. And the portfolio I built even before I started the buyer's agency and started doing this, I had to just have that psyche of, no, I have to save everything I can to go and do this. So like, how do you do it? It's just like, just do it. If you need to change the focus to be like, well, or if you're especially if you're a really low income earner, don't travel this year. Don't travel next year. I had 7 years I didn't travel. From 20 to 27, I did not travel. And I don't like people. You don't have to do that. I'm not saying people have to do that.
But if you want to replicate what you've done,
you can't look at. I heard this quote from it was our mates, Chris Williamson and Hormozy when they did the potty. They want the view, but
no one wants the climb. I love it.
Everyone looks at where you are and they want the celebrity status or they want the massive portfolio. They want it all, but they don't want the journey. You got to have the journey to then achieve that. You got to embrace this stuff. If that's how you actually want to become, if that's actually the person you want to be, and I mean really, really want it, because you've really got to want it to not buy that thing that you actually want. You know what I mean? And make that substitute of, I'm not going to buy Sanitarium because Kraft's on sale, so I'm going to buy the Kraft peanut butter. But I love the Sanitarium, but the Kraft's half price.
You love that though, don't you?
Yeah, 100%. It's a discount, man. Who doesn't love saving? I don't. It doesn't make sense in my mind that people don't love saving money.
What's been the hardest thing about the climb then? Because it sounds like that's an enjoyable part now. You look forward to it. What's the thing that you don't, but you still do because you know you want the view?
I don't know, man. In terms of what I don't like, is what you said. I kind of like all of it, man. I like challenges. I like having a fight. I love being in the mud, in the trenches. There's a few boys in the team that are a bit like this with me as well. We call it I don't know, man. We're rats. We're mongrels. You know what I mean? Like it's how we've been brought up. We grew up like just having to get what we could get, and that's what it is. We didn't grow up with like the silver spoon, or this was given to me, or I actually had a chat to I just hired Morgan. You know Morgan, my partner, her brother Bailey. And I almost said to him yesterday, he's starting in 10 days, and we were just having a chat because he's written his notice, and I was driving to the airport and I was actually on the phone to him. And I almost said, and I pulled him up on this, I pulled myself up on it. I almost said, man, I wish someone had given me that, because he was like so thankful for it. And I said, to be honest, man, like, and I love being able to help you with this. And I wish someone had kind of given me a chance. And I'm like, hang on a sec. No, I actually don't, because if someone had given me the chance, I wouldn't be the person I am now. I wouldn't have gone through the shit that I went through, and I wouldn't have the mindset that I have now of trying to help other people get to the level they are now. Being burnt by the BA that burnt me, who was my idol at the time, who you and I, you know this story very well, very, very well. It was probably the best $10,000 I've ever spent, him burning me that money. Because now, do you think I could ever burn at 20, any age?
I know what you mean though.
Do you think I could burn anyone that money when I had it done to me?
It's like a kick in the nuts that led you to get a scan that told you had cancer. But you know what? Because you got the kick in the nuts, we caught it early.
I love that kick in the nuts. I love that kick in the nuts. You know what I mean?
Yeah.
And I think it's like, it's embracing the bad things that happen in life. And like I even look at like the things in my portfolio now that they pop up, and the grit and the resilience of building a portfolio like we're talking about today. Man, it's there's so many things that come through it. And like that grit and resilience, you got to almost put yourself in there. I can't remember who it was or what it was that I heard years ago. There was some dude who was like, he'd seriously made something like massive of himself. And I actually can resonate with this so well, because I think I'd built like a $4 or $5 million portfolio before I went for special forces a few years ago. I ruled out, I couldn't go for it because of the hip surgery I'd had, and I couldn't fight frontline, right? And he purely wanted to do it. And this dude apparently was like $100 million man. I can't remember who it is. I should be able to bloody remember the story.
I haven't heard this.
But he wanted to go for Navy SEALs because he wanted to prove to himself that he could do it.
Like Hell Week.
Yeah, he wanted someone to try and break him so he could prove he could not be broken. And it's like putting yourself through these style of tests. You just can't, I feel like I'm sounding like, trying to sound like Goggins or something, which I'm not. But it's just like, you got to keep putting yourself through these things. If you want to keep sharpening, it's like sharpening the axe, you know what I mean? If you want to keep, this is how you go soft when you stop. If that was the way I was, and then I'm now okay to buy things a little bit above my 20, 30 grand, who cares? That's me going soft. That's me having gone soft because I've lost the edge.
So this is like an indicator for you that you're staying on the right track. You keep doing what you've done to get you where you are, well, then you're going to keep growing because it works.
Yep.
Again, unless the market changes, and then you need to adjust because that's something that you're also open to. But if you start going, it's all good, I'll just like pay that little bit over, or eat that slice of pizza, or whatever it is, that's when you know like things are going in the wrong direction.
Yeah, 100%.
So what I'm really hearing is we need to monitor when we start, it's actually when we stop putting in the effort, when we stop caring. That's really when things are going to go in the opposite direction.
I think it's something everyone's got to be like really careful of within themselves. And I have pulled myself up on this as well, because we were talking about it earlier. It's weird. The things that we can kind of get bored with because we've been doing it for so long, and even sometimes because we get so good at some things, but then it becomes almost a little bit monotonous. So then you got to look for, you got to challenge, you just constantly be challenging yourself. And I think when you're constantly challenging yourself, that translates to every part of life. And if we dial it all the way back to the very first question you asked me about this, like how or why do I still think like this? I think it's just because like, I don't want to get soft. I don't want to, because I feel like, I don't know, maybe it's just because I'm in my mid-30s now, but I don't know if that's just because like that'll make me feel like I'm getting old if I just get soft and just start taking these. I don't know, I still want to fight for things, you know what I mean? I still want to get that win, and that's good. You just want to win, you know what I mean? You should always want to win. I got fired up about this recently. If you're not playing to win, why are you playing? You don't play to draw. You don't play to lose. You play to win. So why are we playing this game at all if we're not playing to win? And that comes down to portfolio, business, life. Everything should just be playing to win. We're not here to cruise. We have a very limited time frame on this planet. You know, we wouldn't be sitting in here trying to do this thing, you know, prep up on the way down. Man, I want to deliver great potties for you, great potties for the audience, great potties for me. I want us to all win. You know what I mean? From doing this thing. And I think this is the biggest thing, man, is when people, the BA that burnt me, he stopped wanting to win anymore. He stopped wanting everyone else to win. He just wanted him to win. You know what I mean? And he stopped, like the edge was gone. It turned into a volume game instead of a quality game. Instead, why not try and figure out how to deliver quality at volume? You know? And so like figuring these things out, man, this is how you win. Winning at all these different little things. And I don't know, man, I think like I look at everything, I just play to win. whether that's saving my $2.40 at the supermarket or my $6 because of my 4-cent bloody savings ticket at Coles. I don't care. I just won.
You must get a weird look.
I don't care, bro. I don't even look at it. Let's just pay it. You know what I mean? I don't know, mate. I know we've gone a little bit of a tangent here, but
I do want to pull you back to how fast.
Yeah.
But before we do, you reminded me of a podcast I listened to just recently. I can't actually no, I think it was a TikTok of a podcast, and they were talking about the ability to see stress as a challenge was one of the key indicators in like that growth and achievement in moving forward. And apparently, the group of people that actually had that more than anyone, I might be butchering this quote, but I'm pretty sure it's on point, was Navy SEALs.
Okay.
And it's just interesting to hear you bring up wanting to be in Special Forces, talking about Navy SEALs, talking about breaking yourself. Do you feel it's got more to do with, like, it gets hard, it gets stressful, like, and if you get to view that as a challenge, an opportunity to be better, to win, then you're putting it through the lens that's going to keep you growing. Whereas if you see that as, oh God, no, this again, it's going to hold you back.
Yeah, man. I think it's the graft that I had to do in the very early days that like just I think created the mindset in terms of what I have. And I don't know if it's what maybe slows other people down if they didn't. Maybe if they're making big incomes before they built it out or build a business or build a portfolio or whatever. It's like I've got to earn it. You know what I mean? Keep it. And to go on to another level of the point of what you just said, there's an old saying, you know, like calm seas don't make skilled sailors. You want to become a skilled sailor? You don't do it cruising around the harbor.
Yeah.
Go into that storm. That's how you become good. To flow on from the stress and the pressure. So what is it? Diamonds are made under the most intense pressure in the world. You know what I mean? Like you got to put yourself, and that's why we talk about grit and perseverance and all these sorts of things. They are what make you really good. And when you think about becoming a really, really good investor, you start getting to the point where you buy 10, 20 properties a year. That doesn't just come from having a good income. That comes from having done everything and then having the resilience to then go through the process of having to do that many deals, renovations. Because to do deals on that sort of scale, I've got to be making good money on the way into deals as well, you know what I mean? And that's why if that means picking up the hairiest deals that I won't even take the risk on to give to clients, that's a lot of continual pressure and stress every year in terms of the portfolio. But now to me, I'm just handling that. I'm just, okay, what's the solution? How do I get around this thing? And I'm just creating the solution every time with those deals. Whereas for most people, they do one of those in a year and they probably almost would never want to touch property again. So it's those constant stress situations.
Do you have a de-stressor that you do to keep you level? Or is it just, I don't view it as stress, I view it as growth?
I train every day. That keeps me like quite calm. I think if I don't train, I'm much more susceptible to getting stressed, angry, agitated, that sort of thing. I think I'm a probably more passionate person and probably get a bit more agitated than most if I don't go through that. And that for me is a decompression thing every single morning. It allows me to kind of like ground my day and then sort of start and then just tackle things, you know what I mean? But I never used to be like that. I used to get stressed out of my mind with stuff.
How used to we talking? A couple of years ago, decade ago? What do we mean?
It's all part of growth, you know what I mean? So like a decade ago, I would have been absolutely stressed out of my mind with some of the deals that I've done in the last 12 months. 3 years ago, I would have been able to handle it, but I probably still would have been stressed. Whereas now it's just like, okay, well, that's a side business. That's part of my portfolio. That's part of my portfolio business. And what's the solution? How do we figure this thing out? So now I don't even really get that stressed by it at all. It's just part of the process in terms of building.
What's that other Hormozy quote? If you zoom out far enough, like the world is just a little dot. It's like realistically, if we take a big enough approach, like this problem isn't really that big a problem.
Yeah.
I may have just butchered that. Sorry for listening, Alex.
No, I know what you mean, because like if you zoom all the way out, like we're so tiny, for one in the universe, but even for us on Earth, you know, like we're even in Australia, we're tiny, the problems are tiny. It's a matter of, I think this is the biggest thing where a lot of people come unstuck very early in their portfolios or when they try and go to the next level. Just remember when you go to the next level, there's going to be a next level set of problems that come with it. If you want the mediocre results, you play the mediocre level. You want the better results, you go to the next level. You want the best results, you go to the top level. Just remember there's always going to be different levels of problems that are associated with that. And that's why you shouldn't try and jump from the bottom to the top in one hit. Level it up.
I've got follow-up questions there, but I want to circle back to how fast.
How fast so I could build what I've got again? Or just...
Could you do it? You've done it in what, 15 years, 14 years? Could you do it again in 15? Or has the game changed so much now that it would take longer, shorter, what?
Because of price points.
Yeah.
And growth, it's already come. I think with what to answer your question, 100% I could do it again in the same time frame. Purely because, yes, whilst there's been growth, and a lot of growth, my knowledge base now is so much higher, I would know how to do it. I would just apply it in a different way.
Okay.
Yeah, man. So I definitely could do it. It would just be, just doing it in a different way. The strategy doesn't really change that much, man. And like, I think this is the biggest thing. Like, you're always just moving markets. You know what I mean? So like, okay, sweet. Sydney boomed. So we went to Brisbane, Adelaide, Perth, or we went to Brisbane, Adelaide, and then we could see that they were going through a good run. Perth was, in my opinion, it had all the right drivers that ticked up. No one was in the market 2020, barely anyone was in there 2021. That's when we were in there. Market turned properly in 2022. Getting into those markets before those growth waves sort of came. Man, there's always opportunity. And this is the biggest thing of like, I've missed too much. You're going in way too much of a honed in view. There is always opportunity. There's always markets worth going into. And there's, exactly that. There's always opportunity to kind of do it. So I think, yes, things have changed a bit, but I have absolutely no doubt I could do it again, especially in 15 years. No question.
I always think of that when people say like, I've missed the boat or we see it in the comment section all the time. And it's like, well, it's like if you're looking in Adelaide back 20 years ago and an average house price was like 120 grand.
Yeah.
It's like, okay. And then it doubled to like 250, 300. Did you miss the boat? No, you just missed that boat. Like there's another ticket available, but you got to go to the ticketing booth and get it.
But just go somewhere else. Go somewhere else for now. It's like,
it.
Like in 2007, people in Perth, I guarantee you in 2007 would have been like, oh, I missed the boat, had a crazy boom. The market did 150% in 3 years, blah, blah, blah. Same thing in like Sydney in 2000, 2003, but then fast forward to 10 years post Sydney 2003, 10 years did nothing. And then 2013, 2017, it doubled again. But if they'd gone to almost any other market, let's use that exact example. Sydney 2000, 2003 doubled, did more than doubled. Then 2003 to 2013, it flatlined. If anything, it actually came back. Now, in that time frame, if you went to Perth, Brisbane, Adelaide, Hobart, or a squillion bloody regional locations as well, they all doubled in that time frame. So if you had missed Sydney in 2000, 2003, but then you'd gone and just invested in any of those other 4 capitals, you would have doubled your money or more. You could have sold out and then gone to Sydney in 2012, 2013, and then you would have been on the crazy run. Or if you got to the end of if you in 2007 went, damn, I missed Perth, Brisbane, Adelaide, Hobart, all those cities that we just said had doubling. If you missed that, maybe you were in that city. But then instead you went and bought in Sydney. By 2017, you would have more than doubled your money in that time frame as well.
So just because you've missed somewhere doesn't mean you missed everywhere.
It's always locations, man. Always locations. Unless you're investing in the old school blue chip psyche and you buy into the back end of a cycle and then you sit in that market for 10 to 15 years and do nothing, then it's not going to feel great.
Missed the boat.
But if you look at this with a proper diversified look at it, not just honed in on one location, one state, there's always opportunity, always something you can do. Man, I own properties in it's like 5 or 6 states across the country now. Like I didn't buy them all at the same time. I started purely in Sydney and then I went to the maybe not 6, I think it's 5 states across the country. So
a few.
Yeah. A few. And it's always been at different times, so yeah, man, always opportunity.
All right. One of the things I'm really interested in is, and have you got your phone on you or is it in the room?
No, I'll leave it outside.
All right. Let's grab it in a sec.
Okay.
I want to see what a day in the life of Sam Gordon actually looks like. Can we see your calendar?
Yeah.
Yeah?
Yeah.
Let's have a look. Do you want to go grab it?
Oh, I'll go grab it. Yeah? I'll go grab
it. A few moments later.
I'm curious what you actually do, apart from cut out shopper dockets for the 4 cents.
So what do you want to look at here? I mean, if we look at
pick
this,
a day,
right?
man.
All right,
What's normal for you?
I mean, this is my week coming, right? So Monday's a bunch of different meetings within the team. Some bit different. I always do a bit of research on a Monday as well, like location research. I just put it in every single week.
You're still doing that yourself?
I like to do it. I do it with, I got a couple of guys in the team I do it with as well, but they bring everything to me and then I dissect it and go through it and we do that. We literally do that weekly because we're assessing markets we're in. We're keeping tabs on markets we see coming up and then we're making notes on new markets we're entering and different things we're finding as well. So
now, is this before the morning routine? Like this is the first thing or
yes? No. That's actually what I do last thing on a Monday. So I don't put into my calendar what I like getting up and all the rest of it. Like,
what does that look like?
So I get up 5 a.m. every morning. I kind of chop and change a little bit what I do, but at the moment, my morning routine, I'm up at 5. I do mobility work in the morning. I've played sports for a very long time and train a lot. So I find these days I've got to do the mobility, get nice and flexy in the morning.
Is it like yoga kind of stuff?
Kind of like, it's like a 10, 15 minute kind of like a movement thing before I go to the gym. So I just do it to limber up.
Okay.
I train every morning. So like if we'll say Monday, if we kind of go to a Tuesday, Wednesday days, they're going to be like big strategy days of what I've got in here. Mm-hmm. But yeah, I'd normally go to the gym about 5:30. I normally train for around about an hour each day. I normally lift on a Monday, Wednesday, Friday, Saturday, and I run on a Tuesday, Thursday. On my run days, I'll head to ice baths and saunas after that as well. Mm-hmm. I used to do it this is actually a weird bit, I guess, insight into myself. I used to do it after lifting, but I found it was like kind of holding me back on
You can never
gains.
run as far, can you? Is that what you mean?
Running's fine. It was more lifting. So lifting post, doing it post, I found like I was really plateauing with my lifts, gym sessions and everything.
Okay.
So I stopped doing it after. Sauna's fine, but it's the ice bath because it repairs the muscles too quick. They're supposed to like bleed and tear and
I've
stay
heard
open.
that. Okay.
Yeah, I found I felt great after it, but I was like losing that side of things. So sauna still feels good. I do a cold shower instead of an ice bath. I think because the constriction's like too hectic.
Yeah. Okay. All right.
Yeah.
And what day is this? Is this?
If we
is
go
that
into
a whole day,
yeah, they're the days.
so one day or
That's one day.
yeah,
That's 2 days.
so that's a week. Gotcha.
Yeah.
Okay,
That's a week there.
Did
So
you
like,
want to click on like a day?
I don't even know how you do that.
Which one do you do?
Oh, there we go.
There you go. All right. So if that's a week, why don't you pick an exact day?
Yeah, so we've jumped into this one here. I mean, it's pretty basic, man. There's nothing really to write home about. But man, I'm normally up at I'm up at 5, do my mobility, normally leave for gym, get to gym, train for about an hour and a half. I'm normally back like a little after 7, and I do that every day.
Back home or back at the office?
Back home. So I go home first. Actually, kind of depends because I normally work from home 2-3 days a week and I work from the office 2-3 days a week.
Okay.
If I go from the office, I'll just drive straight to the office and shower up there.
Yep.
And then normally starting around about 8, kind of prepping, getting ahead of the day. First meeting normally starts around about 9. Different things happen at different times. So yeah, I do different things different weeks. So these days I only actually strategize with clients 1 week of a month, purely because, so I have other strategists within my team that actually handle kind of the bulk of clients these days. Most of the guys that I deal with are like OGs that I've been dealing with for quite a few years.
Yep.
And they're the ones that I'm doing touch base calls and strategy sessions with. So touch base is just a smaller version of a strategy.
Okay.
Every single, I could just do that 1 week of a month.
And that happens in the morning. So not every day, but like on this specific day that was happening.
No, yeah. So this specific day, kind of getting into the office at 8. This is a little out of whack because it's on Adelaide time. First meeting is at 9. So I've got a team meeting Wednesday on the 9. Going into, I've got my 2 EAs I work with. I've got the meeting after that with them.
So, and they set you up for the week or you set them up for the week?
For the team meeting?
No, for the EAs. How does that work?
Pretty much they just bring me things I need to deal with.
Right.
So we just do it at the start. So I'll either put that in first, or I'll either do that like around the 8, or I'll do that after the team meeting.
Okay. And what are you doing after that?
Then, man, for this day, I've got this external potty that I do a bit of work with. I'm just jumping on doing a bit of a sesh with them, pre-sesh with them, the way that we do as well. The rest of this day is strategy sessions with clients. So I've got 2 in there before lunch, before like a midday block. I'm very much about reset the mind as well, because I go so deep into our strategy sessions with clients. Like sometimes I'm talking about so many different things. I used to do like a whole day back to back of like 10 to 12 strategy sessions, and I'd be
Burnt by the end, don't you?
for one, I'm cooked, but then like I actually found it was the middle ones that suffered the most. I'd be really good in the morning, and then I'd struggle for a few hours, and then I'd be on fire at the end of the day. And so I kind of just felt like there was this weird like middle patch. So I kind of just like took the middle patch out for like this sort of recharge bit, and then I just kind of seemed to finish pretty strong after that.
And what's the recharge like consist of?
I just normally just go have some lunch.
Okay.
And just, when I say recharge, just take my eyes away from a screen and a phone and stuff.
Yeah. Okay. All right. And so you're doing strategy sessions, and that's what all the green ones are?
Yeah, they're all that. I've just put a block in there so no one else can block anything in there, because sometimes I'll obviously have to vet deals and assign. This is the thing, I actually don't put. There's a lot of blocks I don't put into my calendar. You can say I didn't prep for this at all, because like the things that I normally would have in there aren't. The blocks of things that I would do in there, like that block for lunch. I'll go have a bite, but then I might sit there and assign deals, or call the BAs and work through a few deals, and then who am I going to assign it to as well? That's kind of within there, and then I've got 1, 2, 3, 4, 5. I think it's 5 or 6 strategies after lunch that I'll punch out. Again, this is SA time. So I think I finish up with strategies around about 6 p.m. From 6 to 7, that's when I'll be getting back in there and assigning deals again, working like on the phones to the BAs, just working out a few different things on deals, assigning to relevant clients. I still do pretty much all deal assigning within APS to specific clients based on their briefs. Normally finish about 7. Take the dog for a walk. I try and take the dog for a walk almost every night, just to kind of, that's my little decompression thing. I normally finish about 7, 8 o'clock most nights. I get into a really good workflow at night because my phone's not blowing up anymore. I seem to work really well, and sometimes I work till like 8, 9 o'clock at night. Yeah, man, that's pretty much it. But this is.
So then you're going home having dinner, or you've already had dinner at the office at like 6 o'clock sort of thing?
Nah, I don't. I should eat earlier than I do, but I don't. But yeah, man, it's the thing with me is it changes so much. So every week is different. So like if you look at like
That's a typical day for that day. But then if we looked a week in advance or week before, it could be totally different.
It's a typical day for that week. So like that week, I'll be focusing on strategies for clients.
Yep.
And then kind of what I do these days, I actually got back on the tools a little bit because I got over just doing the same things over and over. And I kind of got over being a boss, like a boss of APS. So I kind of wanted to get it back out there in the field. So I go back out there sourcing deals and stuff. So I might source 2 weeks of a month as well. And I'll be strategizing for 1 week. And then the other week I might be doing podcasts, like coming down, doing external podcasts, recording podcasts internally as well. So I normally do that like 1 week of a month. I'll be sourcing 2 weeks a month, and I just strategize for 1 week of a month.
Do you reckon you'll ever hire an MD and just like get back on the tools full time because you enjoy it?
Nah, because there's like, I do enjoy it, but also I have a much shorter, probably like patience, like tolerance, you know what I mean? Like I think, I don't know what the exact word is there, but I think if I did it full time, I'd probably get a bit too pissed off with like scenarios that pop up. So it's nice to kind of have the breaks between it.
Yep.
Man, I still love doing it. That's the thing. I still love putting deals together. I still love getting on the ground, speaking to agents, creating relationships, getting access to mad deals. There's such a good feeling when you get a mad deal. Like the win of that, it's kind of, I don't know, it's probably the equivalent to like scoring a goal in soccer or something. You get that euphoric feeling when you score. And when you're putting deals together, I think it's a very consistent thing. And I think this is where I struggle kind of taking that backseat because I've always been someone that's been in the trenches. Mm-hmm. So yeah, man, and that's the thing. I'm not a typical like call it director or CEO. It's just meetings after meetings. I hate meetings. I get so drained by them. I'll do a couple and I'm sweet, and then if I got any more than a couple of days sort of thing, it really saps me. So I like to be client facing, be working with guys, especially guys that I've built portfolios with for a long time. You know, do good strategy sessions with them. Keep working on building up their portfolio. How are we working past this thing or that thing? What are we putting in the portfolio next? Strategize the next couple of steps ahead. So I'm like, I do a lot of that sort of work still, especially with OG sort of clients. And then, there's so many different things. That's the thing. My week and my days are so different across the board. My morning routine and my evening routine stay pretty similar. But yeah, it's more the day-to-day is what changes.
I want to ask you what the Sam Gordon superpower is. You've actually popped up in conversations with a few people, and you and I were talking about this off air before. Yep. And it's like, oh, well, Sam can do this because he's got X or he's got Y, and I want to know what your take on it is, because I've got my theory on what it is that really makes you so successful in what you do. Mm. But if you were to take this thing, whatever you think it is, away, you wouldn't be able to achieve what you've achieved. What would it be?
When you say superpower, you mean personality trait. You don't mean some bullshit thing.
Sure, like I don't actually think you can fly. Maybe.
A bit too much to carry. I don't think the wings would be too much bench.
Personality trait.
Okay.
Yeah.
It's actually funny, man, because when you asked me the other day, I was like, I can't really think of anything. Because to me, it's the norm. You know what I mean? But I think, as you said it just then, it's pretty simple in my mind. It's passion. It's quite simple. It's passion and grit. Like that's all I had is why I was good at soccer and why I've done well at business and then why I do well at investing. The passion, it just makes you want to win all the time. I think that's the biggest thing. But you can't really breed passion. Like it's one of these things you've got to. It's like that example we were talking about before. You've actually got to like really want to almost be like a deal pig. You know what I mean? Like just like always be looking for deals. Willing to go for discounts. Want to haggle people, negotiate with people all the time. Like you just got to love it. You know what I mean? Love that piece of it. And I think if I wind all the way back to growing up and team sports, for me, it was huge. And kind of the character building that went with it was absolutely enormous. And I think I just found that I've always been extremely passionate, like at almost everything that I've done, but specifically when it comes to portfolio business and sports and everything like that as well. I just love to win. And when that is kind of combined with grit, because there's wanting to win, and then there's kind of being like doing it almost at any cost. You know what I mean? There's the want to go really, really hard and all the rest of it. And then there's when you combine it with the grit piece, it's just like, no, like let's stay trading blows for the next 10 hours because I'm not going to yield first. And I think that's grit. You know what I mean? And when that grit is there, especially in the portfolio, in business, in sports, in whatever it is that you're doing, when you have the grit, it means you're staying to the end. And if we look at property, the biggest issue I see with people is they get disheartened by something and it stops them on the journey. And
like selling too early?
No, I mean maybe selling too early if something's happened, but I mean something happening and staying the course. Because there's like things will always pop up in property. It's always you're dealing with bricks and mortar and you're dealing with people. Mm-hmm. the two probably biggest things that something's going to go wrong with in the world is a structure, and then people. Right? They're both inherently going to have some issues with them at some point. You have to, like, I would almost say, just like, you need to prep yourself that something's going to happen with it, and then when it does, deal with it. Don't not expect it. Never think it's going to happen, and then when it happens, like the world, the shit hits the fan, the world's over. That, to me, you got to have that grit, persistence to keep going through it. So I think if I look the most at myself, got the passion, always want to win. Obviously, you never play to lose. Always want to win. And then I think combining it with the grit, for me, they're probably the two big things. There's other things that obviously kind of feed off it that make me who I am and have helped me become really successful. But I look at the first 12 months in business. I didn't have a client. Like, for 12 months, barely did a deal in the first 12 months. Like, at the very, very end of the first 12 months, I did a deal. There's a lot of people that would shut up shop at that point and call it quits. And when I say I didn't have a client, I literally did not do a deal, did not get paid for about 11 months in my first year of business.
Were you pushing as well? Or were
I was
you
trying,
pretty
man,
cruisy?
but fuck it, dude. I'd never done sales. I had never run a business. Like, I'd been a farm laborer. I'd done well at investing.
Yeah.
But I also never told anyone my story. I never wanted anyone to know my story because I was very, like, private about what I've just always been. I brought up in a very, like, kind of private family with, like, don't want people to know our business sort of thing. And yeah, man. So, like, to tell that part of it was a really hard thing for me to do, even though I'd done well. And then it kind of worked against me because people were like, well, who are you? Like, what have you even done, sort of thing, compared to big businesses like the guys that I got burnt by. So yeah, man, it was kind of, had to really push and go hard, during that time. And it was a hard time frame to get through,
Do you feel your grit, to use your descriptive, is exactly the same as it was at the start? Is less? Is more?
It would definitely be more.
More?
Yeah, grit is something that I think builds over time. It's the same as, like, sharpening the axe, like I was talking about before.
Yep.
The more, like, hard situations you put yourself through, the more that grows. But it's the same as the more of the easy options that you take, the more it weakens. So it can definitely go, anything in life can go both ways. It's like running or any sort of sport. So the more you do it, the more consistent you set, the better you will get at it. Mm-hmm. But if you stop exercising, you will probably get fat.
Mm. I stopped and I got fat, so I'm a testament to that is true.
You know what I mean?
Yeah.
But if you stop, trying to better yourself, you stop trying to win all the time, you're probably going to start losing because you're going to take your foot off the pedal. That's what they say. Like, when you get to the top of the mountain, it's not the other people that are, like, at the top you need to worry about. It's the people coming up the mountain behind you because they're trying to get to that level. So they're still pushing because they haven't made it yet. They're the people you got to be worried about, not the other people at the top, because they all go soft. They all go, like, the majority will go soft.
How does that translate to building a portfolio? Are you talking more building the business?
The longer you do it, 100% the tougher you get at it. Because I think what I see so often is people either fall off the bandwagon or they embrace it or they try and embrace it. And if they embrace it and get through it, then good. Or if they try and embrace it and then don't. And sometimes that's how it can be, like, they can fall off. But at the same time, that's the character building that will either make or break your journey. Because you are 100% going to hit something at some point. And when you go through it, if you get it and you win and you create a solution out of the back of it, you can take it as a lesson and keep moving through it. Because we all have things that we do that we don't get the exact result we hoped for out of it. Mm-hmm. But I think if you can push through those times where that is going to happen and you build a portfolio of this size, there's 100% been times of things that I thought were going to turn out a certain way that didn't go that way. Or these big curveballs came in that I didn't think that were going to come in that did, right? And I think, man, this is just those things. You just got to keep pushing through this stuff. And we have all been through, anyone who's built a big portfolio, yourself included, you would know, we all go through these times of these curveballs come. You either get through it or you're gonna take a step back or you're gonna stay on that same level. You know what I mean? Like, and if you stay at that same level, you're gonna cap. Like you'll cap because your ability to kind of keep moving and pushing through is also gonna cap. So this is where keep moving through from that perspective. That's where I see both myself and then when I look at clients that have had the biggest growth as well, it's when they just embrace these things. You embrace it, you create a solution, you move past it.
So for anyone really wanting to grow a large portfolio, run towards the issue. Don't run away from it. Solve it. Do your best to enjoy solving it because we maybe not enjoy it, but just go like, this is just a part of it. Yeah. Let's get good at this. And just keep running towards them.
Yeah, man. Solutions-based thinking. That's what it's all about. And at the end of the day, man, like even if something, I never look at anything as a loss as long as I take a lesson from it.
Book that changed your life the most?
Your mate, Steve McKnight, 0 to 130. He was like my first 0 to 130 properties in 3.5 years. That was probably the first proper property book I ever read. man, that changed what it meant to be successful in property.
What, just setting a whole new standard for you?
Yeah, it's just wild, just crazy. You know what I mean? Like, it's a different level. If I think about anything that's really changed my life, I can't really say anything that I've read these days is that life-changing for me. I might get a couple of good things. I don't read property books that much anymore. It'll be more, different.
When are you writing yours? When are you going to drop the Sammy G story on us all, mate?
I don't know, mate.
Soon?
I don't have
Sometime?
time. Nah, mate, you and I have spoken about it for years. I don't know, mate. It's finding the time to do it, I think. But I can't say anything really changes that much of what I do now compared to, what that did for me back in the day.
Okay. Steve McKnight's 0 to 130 properties. Action step. Before we move to arguably the most important question.
Okay.
If someone's been properly inspired by this, because there's going to be a whole bunch of people that are like, that probably sounds like a bit more work than I was thinking. What about for anyone that's gone, I got grit, I got determination, I want to shoot for the stars. What's something they can pull out the headphones straight away and put into action?
It's making those changes for the little wins. You know what I mean? Stack the wins. That's the biggest thing. Stack those little wins every single day. Whether it's the fuel docket at Coles, whether it's the bloody, half price. If this is where you really need to cut your little things to get your little wins to then build it and change from that side, just stack the wins. Whatever that is. If you're already doing that, it's like, okay, well, what's the next step that I can do? It's like what else could you win at that you're doing, but maybe you're half-assed or you're just doing it? What else could you really, really win at? I found for me when I was stacking the deck and really just stacking the wins after win after win, that's where the stupidly huge compounding growth came from. If you look at Warren Buffett's wealth, it starts here and then it goes, and then it just goes woof. Mm-hmm. And it's the compounding effect. If I look at the last 15 years of my life, it actually would be exactly the same. It would be and then it would just go woof. Like the last probably 7 years. There'd be 7 years of very slow growth, and then it would be there would be 7 years because a couple of years before I started the business, it was actually when I got burnt. That's what put the real fire in my belly, was when I got burnt by the BA. That's when I just started going crazy. That's when I was just like, no, you know what? And I think I did five deals the next year, 7 or 8 deals a year after that. And then that's where I just started going to a completely different level. But I think, stack the deck, stack the wins, focus on, really, really focus on this stuff. And what can you strategize around and take yourself to the next level? Are you pushing yourself as hard as you could be pushing yourself? And be honest with yourself with that. Everyone thinks we're going hard. Even sometimes I look at myself and I'm going hard, and then if I actually haven't ordered what I'm doing, I'm like, nah, you're being a bitch. You could definitely go harder.
I think even being able to have an audit of what you're doing is such a huge thing. To be like, am I really pushing myself as much as I could? I understand how important being positive is. I feel like I'm asking another question now, but I understand how important it is for myself. I know how important it is for you. But it sounds like what you've just said then is so much of that motivation came from the stick rather than the carrot. It came from the negative place and that huge push opposed to the win that you could create. How do they coalesce? How does that work for someone that's so focused on being positive, keeping a good mindset, but the stick's the thing that was driving you?
Man, I think the craziest thing is it's really hard to kind of build all these sort of characteristics without kind of coming from it, if that makes sense.
Kind of? Expand on that.
Okay, so the easiest way I would kind of put it is, where do all the best fighters in the world come from?
I don't know fighting, so you're going to have to use another analogy.
Where would you think of?
Oh,
okay, where do all the best gangsters in the world come from?
New York.
They come from the darkest places in the world. Okay. You know what I mean? So you think of all the fighters, so many fighters, and I'll come to the point of this, but they come from third world countries and poverty and Brazil, South America. You think about all the soccer players. So many soccer players come from South America, Africa. Yep. These places where there is no plan B. You look at Francis Ngannou, whatever the hell his name is, the world title holder in the heavyweight division of the UFC, retired now, but he was in Cameroon as in a salt mine for 4 years as a kid. Yeah, so it's I'm either pretty much a slave for the rest of my life, or I have to fight my way out of this thing. And the reason why I'm using this analogy is because it is extremely hard. And this is where you have to be so conscious of this thing. Because people say, I'd love to have that level of grit or determination or that passion where I do just want to win and win everything. Then put yourself in those situations. Because whilst that is a curse for 99% of the populations that live in those areas of the world, the other 1% become the best in the world at whatever else they do because it's their only option. And for me, it was my only option. I didn't have a trade, didn't even finish high school, didn't have a uni degree, didn't come from a family that knew how to build into wealth or businesses or all the rest of this sort of stuff. And so for me, I had no other choice. Like that, this was the thing that like I could see a path for it, and I'm like, well, I have to go all in on it. It's all in or nothing. And I think this is where, again, this is where I even won back to, you know, other people saying they'd be happy to take a you know, something at market value or above. And I'm just like, I can't, I don't think in 50 years I'll think like that, because it's so ingrained in me. But if you don't come from that, it's not the end of the world. You just got to put yourself in that situation. Because remember, even though 90% of the world's best fighters might come from all those third world countries and scenarios, the other 10% probably come from pretty good upbringings, good families, potentially money. So it doesn't mean you can't do it. It's just like you're playing against the odds a little bit, and you've just got to embrace that change in journey. I don't know if you'd kind of put it that way.
So it's all right if the stick starts it off. If anything, sometimes it sounds like you're saying the stick needs to start it off, but the stick isn't what keeps it going. That's when it changes more so to the carrot, to the positive focus, to the. Have I understood you right there?
I think so, man. I think it's a combo.
All right, man. I'm just looking down at my notes, and I've just written down get job and salt mine.
I do not advise that. I do not advise that. Can I ask you a question?
Yeah, of course you can, man.
You said before you have an idea of what my superpower or characteristic is. I'm actually just curious what your thoughts are.
I think your superpower, well, it's kind of two, but is that you're the kind of person that just does it. There's no if, buts, maybes, and not to say like shoot from the hip. It's one of my favorite sayings, Jake Peralta from Brooklyn Nine-Nine, eyes closed, head first, can't lose. I don't think you're like that.
I think you can lose with that.
yeah, exactly. But what I think is that you're the kind of person that just keeps doing it while everyone else is going, what is it you're doing? And then people are still going, oh, no, let's think about it. You're still doing. That's what I think it is. I like you don't get me wrong, man. You're a smart dude. I spent enough time with you to know that you know deal. You've obviously got an incredible work ethic, but I think it's that consistency of just keep doing it. Like the deals that you're putting together, you haven't invented this new deal formula that every property investor is going, oh my God, how has he done that? You're just going, this and this and this works. Keep doing it. I think that's what it is.
Yeah, man. I mean, really, when you think about it, it's just like, it's the grit. And I guess the passion for me is the win. You know, I mean, just keep doing it. Keep doing it. Just keep winning. Keep winning. Don't take. I think this is the one big thing with us, myself. We're never gonna change. We'll never sign on 1,000 clients to just get 1,000 deals done. You know what I mean? And just they're whatever. It's just like each deal has got to have quality, and that's how we have to run by. Because it's just like it goes completely against my moral compass to go anything but that. It's just it is what it is. We'll never change from it. So the craziest example of that. I won Buyer's Agent of the Year this year. I remember it's so easy to remember the date because we're the leap year this year.
Congratulations.
Thank you. It was the 29th of February. So I'll never forget the date because it's like once every 4 years, right?
Yep.
And on the 1st of March, so I literally had just won Buyer's Agent of the Year. I spoke to my operations manager, called me and he goes, man, we're at that ratio that you told me that if we ever get to, we have to close the books. Because we've signed on too many, we've got too many clients sitting against deals. Because gotcha. Really, really tight deal flow. December, January, it was almost no deals. Like the market was so dry. And then in February, people were coming back and we'd had a good sign on month in February, but like we still weren't getting like good deal flow through. And there was always a ratio that we sat at, which he pretty much just tracks every week. And at the end of that month, so before I'd even won the award, that had happened. And so the morning after winning Buyer's Agent of the Year, we closed our books and had a thing up online saying, sorry, at the moment we're at capacity. It's just like, I probably could have thrown, a silly number on of just like, yeah, no worries, one Buyer's Agent of the Year. Like this is what the sign on, the fee, or this is what the fee is to work with us. But we were full because that would have been a disservice to clients that were already on the books. And it would have been a disservice to people coming through as well. Because I also don't believe in, I believe we're priced fairly for what we do. And yeah, man, like we had our books closed for about a month after that point because we're just full and we had to work through that client list to kind of clear the front end sort of amount of them. And again, the deal quality doesn't drop. And I'm not going to go into detail around what those quality control measures are, but like, obviously with how busy I am now with what I do, I had to bring in certain quality control parameters, and that's certain people of a certain level of knowledge and ability and experience in between deal coming through the business and deal getting to me for assigning to a client and doing a final valuation, everything as well. And bringing that bit in has just made it so good. Has just made that quality control piece. You kind of mentioned offhandedly to me this morning, if you remember, at gym. I didn't say anything to you about it, but you said to me that surely when you get to a certain size business, a few shit deals will slip through. I didn't really say anything to you about it because I didn't want to throw anyone else sort of under the bus on that front. But man, I brought in so many literal quality control checks before it gets to me that it's almost impossible for a bad deal to go out, or a deal to go out that isn't to a standard that we know what it is and that we present it to a client at. There's just so many checkpoints before it gets to me that the quality control is massive.
I brought that up because we were talking about like growth, and I was telling you how like our business is growing now, and the teething issues that can come from that, and then if the ball's dropped. So what I'm hearing from you, and I know we're going off portfolio into business, but I find this fascinating. When you're getting to that stage where you're growing, focus on making sure that you're really putting in your stop losses, that you're putting in enough that it's not even going to happen. And I guess this does actually probably translate over to the portfolio growth side of things when it comes to serviceability, when it comes to maintenance buffers. Is that what you're saying? Like,
yeah, man, it's literally dial back to the example you mentioned before, people being okay to buy a deal 20, 30 grand above market value. If I did that, it would completely shoot my game plan of what I've built my whole portfolio off in the head. It doesn't work. It wouldn't work the same way. And yeah, man, I feel like those quality control measures, and probably one of the biggest things I could stress to people who are like doing this themselves out there, or even doing this with a different buyer's agent or whoever they're working with, is like, you really want to be checking these quality control. Like, not even checking the quality control. Make sure your quality control measures are at a decent point, because that's how people get burnt. Like the buyer's agent that burnt me, I thankfully never bought a deal. I had been investing enough that I knew it wasn't a good deal. But you said to me this morning that clients that have come through, you're doing unstuck yourself portfolios that have been burnt by this guy, by deals that they'd bought. And unfortunately, trusting implicitly, it doesn't end well in an industry that's not regulated. So quite simply, in my mind, man, when you go about this way and we make sure all those things are done correctly, you're gonna continually stack the wins from that side, because we're gonna keep stacking the wins means all the little things, all the little checkpoints. Make sure you're not putting the duds in there. You're not making mistakes on these things, especially early in a portfolio. You can't afford to do that.
Arguably, the most important question. I don't know how many times I've asked you this now. I'm probably going to ask you a few more.
What pizza?
Sam Gordon. What is your favorite pizza?
Mate, it's still barbecue meat lovers, but I got to say I've been loving just the flat out pepperonis lately.
Were you in Europe recently?
Yes.
Did you go to Italy?
No.
Oh, okay. Did you go anywhere that had good pizza?
I don't think I had a pizza. I had a great steak in Porto. Porto's a great city.
Yeah, I don't think that counts. Was it like steak pizza?
It was a steak. Kind of goes in line with my barbecue meat lovers. You can't go wrong with the barbecue meat lovers. Oh, you know what you could do, and I have done this before. Yeah. Throw a pineapple on it for a bit of fresh zest. I know you don't like your pineapple.
Right, I forgot about that.
And maybe an anchovy, some anchovies.
You're just trying to wind me up now, aren't you?
That's mad. You got the anchovies got a bit of salt.
And then salt tastes like cat food.
And then the pineapple. Have you eaten cat food before?
I was young.
And then the pineapple. I like the pineapple because it gives you that juicy hit, like a little bit of cold in all the heat.
Man, it is always a fun chat when you're on the show. Sam Gordon, you've achieved some phenomenal things in the property space, mate. Both in the BA space, but personally with your portfolio. Mate. I don't know how else to put it, but thank you so much for actually coming on the show and opening up and giving all of us a peek behind the curtain to what it takes to be the kind of person that builds a 108 strong rental property portfolio.
Appreciate it, man. Absolute pleasure as always joining you.